Happy Thanksgiving to all of the MMTs and our worldwide network. It is Thanksgiving Day in the United States. One of the things that we'd like to show here again is the Dow Jones. This was 1 year ago in 2011. We were putting the bottoms in. We had this great rally that started a bull run in 2012, right out of the gate in January. We're coming to a closure to 2012. One thing that I will tell you, as I have told many of late, is that the whole rally, if this Dow Jones goes into a weekly sell signal, we are below the 50-week. Now the S&P 500 I showed earlier, I will just tell you that the lows over here are potentially going to come into play. This was the first correction of the year. So let's draw this trend line on the Dow right here. Tomorrow's going to be a light day. Congress is out on recess. The fiscal cliff is upon the Dow. Can lawmakers do the right thing and come to a resolution? We were deeply oversold in the short term. November, December are to be the two best key months of the year, where people buy year end and things like that. It's been put on hold. The 100-week moving average will come into play on the Dow Jones. What is that going to be? 12,427 right here. That's this line. We've got 4 weeks closing below the 10-week. 10-week is about to cross over the 20. The upper end of relief rallies is going to be this neckline right here. If we come up and we hit it, we're going to be selling into the rally. Christmas rally, Thanksgiving rally, and Christmas rally could be combined this year. The markets are waiting for clarification out of Washington. The tax consequences that are upon America on January 1 of 2013 are very real. There is a lot to do with this fiscal cliff. Mr. Ben Bernanke had come out yesterday, before today's Thanksgiving holiday, and laid it down and pretty much told Congress what you have to do. The Fed is running out of bullets as far as monetary goes. If we slip into a weekly sell signal, it gets quite awful. The thing that we will be doing is using, there are bear funds that are related to the Dow. Bear funds have been out of favor for all of 2012. They have already made their moves. We had updated them a week ago. So that when those bear funds pull back from their resistance levels and the indexes, all key indexes, the Dow closed up 48, NASDAQ 100 up 5, NASDAQ Composite up 9.87, S&P up to 1391. There are ways to take advantage of the fiscal cliff and that you can actually profit from it. The thing about it is, so far, everyone remains on the sideline as to what that may or may not be. We will tell people that from a very nice bull that started with the correction and then 5.5-year highs is that we're definitely in a bear correction mode, because we are closing below the 10-week and the 20-week and below the 50-week. That is not bull. That is bear reversal. Once again, 2013, the earnings cycle in January of 2013 and the fall, there'll be 2 quarters, the first part of the half year, can be very ugly. If we have to go off the fiscal cliff, lots of spending cuts, there are lots of recipes in there that does not bode well for free market capitalism and small businesses. There's a lot of controversy around the whole issue. I will tell you, though, if capital gains tax go from 15 to 40%, there'll be a lot more tax selling. We've currently got this little holiday relief rally on this green weekly bar, which is a light trading week. The upper end of the resistance levels, irrespectively in any continuation of these rallies, will be met here at the 10 and 20 week simple moving averages. The longer term bull and the expansion cycle that we've experienced from the lows of 2009 and all of those stimuluses are at very high risk. When I draw a trend line right here, a diagonal trend line that puts me right below, that's going to be the upper end of the resistance. It's broke its trend line, this diagonal long-term trend line here on the Dow. We've also done the S&P 500. We want people to get on board with stockmarketfunding.com for calendar 2013 because, you see, if things go the other way in the shorter term and this thing continues to sell, there are lots of great ways to participate and get paid. Therefore, why everyone is hating everything out of Washington, both Republican, Democrat, and if the world has to suffer with the Obama health care down the road, there are lots of issues in the tax reform. We will deal with it on a day-by-day, week-by-week merit. We'll be updating the economic cycles moving forward. We encourage you to get on board with stock market funding in calendar 2013 because, once again, you're going to need a guide who knows what they're doing. And we have proven that. We go into the weekly sell signal. We're going to break these lows. We're going to break that 100-week moving average, which is very key. And we get right back down here to the 200-week. This is way down here at 11,137. I can tell you that this is not the time of year for Washington to be doing what they're doing. They need to come to some kind of conclusion. Both sides of the aisle need to compromise. And once again, the tax reform, the revenue side of it, it's a very complex subject, but we'll be updating everyone. And we'll keep you right up to date ahead of before the fact, not after the fact, before the fact. That's why you like us, because we do this live before the actual events happen in directional price movement. Once again, happy Thanksgiving to you. And if everything breaks down, there is more money to be made. Bear funds have been out of favor. They've already made a great move in the last couple of weeks. They hit the wall of resistance. They have pulled back during this calendar week. Then the oversold bounce, called a relief rally, is in play. When you go into a bear trend versus a bull trend, there are different trade management scenarios that one must be trained how to use and understand the overall broader turns within the indexes and individual equities. Once again, happy Thanksgiving. Sit down with your families. Forget about all of this. Just enjoy your day. And stay tuned.